As banks face tougher times, they're likely to introduce products that encourage borrowing. And that's exactly what's taking place right now. This program offers credits to lender price adjustments, which means lower rates and lower closing costs for you. It's a conventional program, it's location specific, and unlike many other community lending programs like the Georgia Dream, the Texas First, the Florida Assist, amongst others, it does not have income limitations. Does not have income limitations. Hear that again. Imagine a world where high mortgage rates were a thing of the past. They were history. Well, you should be able to. It was only a couple years ago when we saw all-time lows. Well, that future, or reliving the past, might be closer than you think. The latest shift in the real estate world, plummeting mortgage rates, and the introduction of new programs offering even lower rates. See, when banks and lending institutions are in need to lend money, they seem to find a way to do so. It's funny how that works. I have the inside track on this one. We'll explore how these developments are transforming the landscape of home buying, making affordability concerns a much more tolerable pill to swallow. However, there's more to the story than just the numbers and rates. Stick around and uncover how these changes could directly benefit you, whether you're a first-time home buyer, a real estate investor, a builder, or you're just keeping an eye on the market. We've got exclusive insights and tips that you're not going to want to miss. Hey, welcome to the Darin Hunter channel. I'm Darin Hunter, and we're talking about the latest market trends and insights. Today, we're discussing a hot topic, the shifting dynamics in the mortgage and housing market. We've got some exciting news and opportunities to explore, so let's dive right in. First up, let's talk about the Consumer Price Index, or the CPI. Recently, as in the last year, we've seen a significant drop in CPI. Most recently, literally as of this morning, it's primarily due to the decreasing shelter costs and rental rates. This is crucial because shelter and rents, which had really been stubbornly high, are now playing a key role in keeping inflation in check. What does this mean for you? Inflation is the arch enemy of mortgage interest rates, and with inflation coming down, well, it's leading to mortgage interest rates dropping, making now a potentially great time to consider buying and possibly looking at the opportunity to refinance. Those of you that have bought in the last 2 years, it might make sense. Also makes sense to look at a cash out or even a consolidation opportunity. Right now, with rates lower, it's much more attractive. I can't tell you how many times I hear about folks waiting for rates to come down. Let's count our blessings if you waited for rates to fall from 7.33 in 1971. You would have waited 22 years before you bought a home. In the meantime, home values quadrupled. Well, hopefully we're not all headed down that route again and we're not making that mistake. Now, let's look at the market predictions. There's a growing confidence that the Federal Reserve might be done with rate hikes and could even consider rate cuts next year. This speculation is evident in the downward trend of the 2, 5, and 10-year Treasury. What's driving this? It's really a mix of factors. There does seem to be some cracks in the economy, geopolitical uncertainty, and many investors covering their short bond positions, which boost bond prices and lower yields. In fact, legendary investor Bill Ackman just covered his short position. Another, suggestive positive change for mortgage interest rates and the overall cost of money. Affordability is a big concern for many right now. It's been the primary topic amongst most, really, and rightly so. Rates have skyrocketed, housing prices have skyrocketed, and income has not kept up with either. With the changes we're seeing, there's a bit of a reprieve on the horizon. Lower mortgage rates are a welcome relief for both buyers and industry professionals. There have been rumors of hedge funds getting ready to dump inventory on the market, which would help drive home prices down and curb some of the affordability. But the crash bros have been wrong about that theory for years now. The theory is that they will park their money in T-bills, earn about 5.5%, and there's less risk, there's less headache. Well, so far, that hasn't happened. And does it seem likely? With the short side of the yield curve coming down, that 5.5% may no longer be around. I don't necessarily think it's a bad theory. I think it makes sense, but it just hasn't played out. And I get that the housing market doesn't move like the stock market. It takes time, but so far the crash bros have been wrong. So ultimately, the key will be rates and lending. As banks face tougher times, they're likely to introduce products that encourage borrowing. And that's exactly what's taking place right now. Remember, this could mean a more favorable terms for you as a buyer. And the other benefactor of this are folks that are looking to refinance. These more favorable terms will allow for more refinancing opportunities. If you're finding this information helpful and want to stay updated on the latest market trends, hit the subscribe button and turn on notifications. Your support helps me bring more content like this, and I certainly appreciate it. Here's something super special. I've been doing mortgages for over 20 years, and from time to time, the system plays in my favor. Sometimes the other side, sometimes my side, and this time it appears to be on my side. I've gained access to a community lending program that's only available to a select few throughout the country. This program offers credits to lender price adjustments, which means lower rates and lower closing costs for you. It's a conventional program, it's location specific, and unlike many other community lending programs like the Georgia Dream, the Texas First, the Florida Assist, amongst others, it does not have income limitations. Does not have income limitations. Hear that again. Of course, there's some that will say that it's not fair as the rich or the wealthy will have access to more products, but the reverse is true. The rich or the more wealthy will have an opportunity to gain access to some loan programs that they've been left out of for years. The fact is, many of the community lending programs are too restrictive in today's environment. In order to qualify for a home, you need to make enough money, but the income is limited, so you end up not being able to be approved for either making too much or not enough. I've seen cases where in this particular scenario with this program, the conventional rates are competitive with or even lower than the FHA loans with minimal down payments as well. This could be a game changer for everybody, potential buyers, real estate agents, investors, builders, etc. Are you involved in the housing market? Maybe you're a builder that's having to give up builder incentives to make a mortgage work for your buyers. This program can help your borrower and help you keep that bottom line in the black. Whether you're a listing agent looking to market your property with incentives, maybe you're under contract and curious if your home qualifies for this program, or an agent with clients struggling to get pre-approved. Hey, you could be a loan officer looking for a way to add additional transactions and additional partners. Come talk to me. My name is Darin Hunter. This program could be the solution. It's not going to work for everybody, but it's definitely worth exploring. To wrap up, the mortgage and housing market is seeing some significant shifts that could open up new opportunities for buyers and industry professionals. If you're interested in the community lending program or have any questions, feel free to contact me directly. Let's navigate these market changes together. Thanks for watching. We'll see you on the next episode. My name is Darin Hunter. Have a great day.